here at a deeper look at emerging trends in financial technology, otherwise known as FinTech. We have an all-star panel for you here this afternoon. The webinar is being recorded, so for posterity. So if you need a link to the webinar, put your email in the chat box and we can send you a link to the slides and to the webinar. If you are here as a lawyer in North Carolina this afternoon, we have applied for credit with the North Carolina State Bar, and that is pending. So we will need your bar number in the chat box as well if you want bar credit. So that's pending, and we've received it before for similar programs. And with this all-star panel, we're very, very optimistic that this will qualify for the technology credit for North Carolina lawyers. Now, this is a basics seminar and a current seminar for FinTech in North Carolina. So if you already know how to do your own blockchain, this may not be the seminar for you. But if you're here and really think a blockchain is something that goes on the back of a tow truck, you're in the right place. So we have an all-star panel this afternoon, and I'm going to introduce them, and you'll be hearing from some panelists throughout. We have with us my colleague and friend, Randy Reynolds, Director, Blue Ridge Bank. He is no stranger to North Carolina. He's from the Reynolds family in Winston-Salem. He has a degree in economics from the College of William and Mary. He is a Six Sigma Green Belt, and he has loads of knowledge on investing in the virtual world, particularly with regard to stable coins. So welcome, Randy Reynolds. Next, we have Hunter Bost. Hunter is also on the FinTech committee. He's actually the chair at Blue Ridge Bank. And Randy and Hunter and I all serve on the FinTech committee. Hunter is the chair. He is the former chairman of Riverbank, which merged into Blue Ridge Bank. He has the Master of Business Administration from MIT and a Master of Public Administration from Harvard University. He is from Durham, North Carolina, where he is in real estate and private equity investment. So let's welcome Hunter Bost. So then we have Michael Yin, who is an attorney with Woodruff Family Law Group. He has written a lot on virtual currency for the law firm, and he hails from the University of North Carolina School of Law. And now I am pleased to introduce our first speaker on innovation, the Honorable Donald R. Vaughn of Donald R. Vaughn and Associates. He's been a lawyer in Greensboro for more than 40 years. He's former chairman of the Guilford County Delegates to the General Assembly. He was awarded the 2021 Hall of Fame Award by North Carolina. In addition, he is a law professor at Wake Forest University School of Law, and importantly, he's on the State Banking Commission. So let's hear from our first speaker on the newest and hottest thing going on in North Carolina right now. Take it away, Don.
Well, Carolyn, thank you so much. I'm so glad to go first in front of all these distinguished folk and talk about something that's going to be a new word in our vocabulary. It's been a word for as long as we have been around, the sandbox. But as the title says, hardly child's play. North Carolina joins, and I add, is the best in the nation in the growing number of states with a FinTech regulatory sandbox. And I'm assuming you can see this and see me too. You know, when I went to high school 50 some years ago, this was the most modern device that we could have, a telephone. Who would believe 50 years later that a telephone would mean a watch, a computer, a calculator, a newspaper, a post office, a personal library, a bank, a personal computer, and it would be 1,000,000,000 times faster than a telephone. Who would believe that we would have in our normal vocabulary words like Bitcoin, ransomware, cyber currency, digital currency, virtual wallets, dark sides, that would be in our normal day-to-day vocabulary. And folks, if you don't know what these are, you're going to be behind. It is moving that fast. Innovation is moving 20, 30, 40, 50 times greater than it did years ago. And the North Carolina General Assembly, God bless them, finally got something right. I mean that in the nicest way. They passed the North Carolina Regulatory Sandbox Act. Now, people don't know, and it really has not been explained in the media, what in the world a sandbox is, but it is going to be a very important innovation tool for this state, and it is moving very quickly. Innovation, next slide, Judy. You're going to hear about MarTech's law, mainly from Carolyn. I'm just mentioning here. Technology is going straight up at an incredibly fast pace. Organizational change for governments is slow as hell. This is the way the founding fathers envisioned this country to be, that governmental change should be slow. It should go through a check and balance system. And, you know, we're the best democracy in the world, arguably. And our organizational change on government is slow and is not meeting the needs of technology. Judy, next slide. So the North Carolina Sandbox Act was passed less than 2 months ago and is in the process of being developed now. These other states you see are either in the process of developing a sandbox or have developed one and are moving along. What is a sandbox? It allows an innovative idea, a company, a model legislation, draft of a model to go into a sandbox without government regulation. It cuts out the red tape. What we have learned in North Carolina over the last few years, that laws and do not meet the needs of innovation and technology, that it's going straight out the roof. Now, I'm just showing 3 things that were sitting on my desk. Today, it is announced that we are going to make the Concorde in Greensboro, a Concorde-like airplane that will have over 500 destinations. You'll be able to go out of New York to London in 2 hours and 2 hours and 20 minutes. We have gone supersonic. Yesterday, we announced a mega deal for a mega site, and we have here in Greensboro, we're going to have the Toyota battery plant, which will be the most advanced battery plant in the world. You only turn to today's Wall Street Journal, and the title is The Future of Everything, and it's New Tools for New Trades. I encourage you to read this. It is unbelievably how fast this has gone. So in a sandbox, what happens is this, next slide, Judy. They will have in North Carolina a North Carolina Innovation Council of 11 members. It is a blue ribbon first-class group comprised of the banking commissioner, the insurance commissioner, the attorney general, their secretary, the secretary of state, or their designee, and then 4 other members of the public appointed by the governor and then the legislative leaders. These folk will allow an idea, a project to come into the sandbox and give you a waiver from government regulation, stuff we wouldn't have thought about 10 years ago. It's going to allow new technology to test innovations. And it's in 2 areas, and that's where North Carolina is known for over the years. It is financial technology and banking, known as Fintech, and then insurance. North Carolina has been a strong insurance state, and it's InsurTech. I expect other areas to come into play later on, like legal and other things, but this is what is being tackled first. To go through this process, Judy, next slide. What the leaders here on the council will look at to allow an idea into the sandbox and give the waiver for regulations, it's going to assess the innovator's risk to consumers. I doubt many crazy ideas, but good ideas will pass through the sandbox. It's going to have a consumer protection and complaint process. It's going to make sure you as an entrepreneur has a business plan, and looks at management's expertise. Is this something that is going to work? It looks at the criminal history, checks, it tries to weed out the bad players. And then there's a catch-all phrase we don't know exactly what they're going to do with, but they can make their own rules, their own regulations in letting people in the sandbox. Now, the sandbox only goes for 2 years. There is some clause in there that it could possibly go for another year, but it'll allow for creativity in that without all the darn red tape you have now to be able to start an idea or a business. Judy, next slide. So it's not the old sandbox we knew as a child. It is in essence, a virtual sandbox that you may go into. North Carolina, by all counts, has the best one of the states that have done it. And it'll be something very much to watch. It's going to be, you're going to add the sandbox to your everyday vocabulary as you do cryptocurrency or other things. Now, it is my pleasure now, after introducing the sandbox idea, to turn this over to Carolyn Woodruff, who is known as the Queen of Fintech in North Carolina. She just finished the Harvard Business School program on Fintech technology, a graduate of the ever greater Duke University School of Law with high honors. She's a CPA, she's a scholar. Most people don't know this, but she is one of the best dancers, amateur dancers in America. She's a pilot and on the board of Blue Ridge Bank. Carolyn Woodruff, I'm gonna give it to you. You're excellent, and take it away and let's talk about financial technology and all these new words that are coming at us.
Thank you, Don Vaughn, for an excellent presentation on the sandbox that North Carolina has to look forward to. And there are going to be several things that some of the rest of the speakers will talk about with the sandbox to explain some of the terms. So Judy, if we could start having the slides, and you can go quickly past the first one. I'm going to talk primarily about some demystification of fintech. And fintech can be like volleying jello sometimes. It's hard to get an idea of what something means because it is expanding and it's changing from day to day. So in the words of Yogi Berra, it's hard to make predictions, especially about the future. Let's just take a business school moment, go back to the slide, a business school moment here about Henry Ford, an entrepreneur who started Ford Motor Company in the early 1900s. He needed investors. He approached his lawyer, Horace Rackham. He wasn't in a sandbox because we didn't have sandboxes then, about investing. And Horace went over to the Michigan Savings Bank to discuss the investment in the automobile. And you know what? The banker laughed, ha, 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 and stated, the horse is here to stay. The automobile is only a novelty, a fad. Horace decided the banker was incorrect and invested $5,000 in 50 shares. 10 years later, he sold his stock for $12.5 million, which would be at least $307 million in today's dollars. That's what the regulatory sandbox in North Carolina can do for us. Now, if you have questions, we are manning questions through the Q&A box, and so put your questions there. If you have items for the chat box, go ahead and put the items in the chat box, such as your state bar number or your email if you would like to get this presentation. So Judy, the next slide. What is fintech? So fintech has several different definitions. I'm going to read the one that is in this North Carolina statute that Senator Vaughn was talking about, just for starters. And this is actually certain innovative products or services that support the provision of banking or financial services. So under the North Carolina definition of fintech, it's limited to banking and financial services. But generally, fintech is thought to be support for banking intermediaries. Other fintech services tend to disintermediate banking. And if you think about it, you've got the Federal Reserve, you've got your commercial banks, and then you've got your people or businesses that are utilizing the commercial banks. What do fintechs do? They disintermediate the banking situation. And so let's look at this octopus here. Put in the chat box, how many brains does an octopus have? Do you know? Okay, an octopus has 9 brains. And interestingly, you may need all 9 of those brains to handle the innovation that can come with fintech. Next slide, Judy. Here's some examples of some fintechs. Zillow Group, which probably if you are doing divorce work or whatever, you've pulled up Zillow to find out the approximate price or value of some piece of real estate. SoFi Technologies is big. I'm sure you've all heard of that, particularly in student lending. Everybody has a PayPal account. And then Square Inc., which is the little square device that you can put on the end of your cell phone to take credit card payments. If you want to look at a sampling of all the things that are considered fintech, look at the Barron Fintech Fund, which is BFIXX. That is a fintech mutual fund that hosts a lot of different fintech funds that are fintech companies that are publicly traded. Next slide. So fintech is really mostly about fast payments and secure payments. You got to get the settlement time to be instantaneous from country to country. So when you're talking about fintech, that's what you're really talking about. The story of blockchain and virtual cryptocurrency begins when modern banking takes off like a rocket. Let's go next. So here's some objectives of this presentation, and we will be bringing in Randy Reynolds and Hunter Bost to talk about some items herein. But again, I said this is primarily a basics course, and it's primarily a course to update you on some of the North Carolina laws that are innovations in fintech. So here's the objectives. We're going to first understand blockchain basics. understand some virtual currency basics, understand a few trends in banking, and understand the North Carolina trends in virtual currency. As I was writing this presentation, the Sandbox Regulatory Act was coming down the pike. So Don Vaughn, who's on the State Banking Commission that will essentially be in charge of some of this, that's why we had him speaking on this, because he's so knowledgeable about it. And of course, that's our biggest trend, but we have some other trends to talk about as well. So go on, Judy. So let's do an overview. North Carolina has a definition of blockchain. So, you know, I gave you the definition of North Carolina in the Sandbox Regulatory Act for fintech, which limits it to banking and to financial services. But we also have insurtech, which goes into the insurance industry. And we're going to get into some of the innovative insurance products that are going to be coming out of that. The tech that possibly could be next would be RegTech. And we don't have anything on RegTech yet. And nationally or internationally, fintech encompasses a lot of these. North Carolina has defined fintech, though, as banking and financial, and made a distinction with insurtech for insurance company technology. So let's see what North Carolina says about blockchain. An electronic method for storing cryptographically secure data in a database or distributed ledger technology that is decentralized, consensus-based, mathematically verified, and distributed across multiple locations. That's the definition. So let's go to the next slide. So here's what a blockchain is. It's blocks of data that are chained together. And you know how when you are grinding a steak into a hamburger in a meat grinder? So just think about filling up one of these boxes with steak that gets your grinder going, and you make it into hamburger and you put it in the box. Well, what can you not do with it? You cannot make it a steak again. Once you grind it, that's what it is. And that's essentially how the cryptographically the data is lodged into one of these boxes, and then they're chained together. A blockchain is a system of recording information in a way that makes it difficult or impossible to change back. And under our current SHA-256 computing, the fastest possible cannot reverse it. There may come a day that could be reversed and we could change the hamburger back into the steak. But the prediction is that's 50 years away, but it's hard for me to believe that anything in computing might really be 50 years away. Right now, we don't have that technology though. It's a digital ledger. So if you want to think about it, it is QuickBooks, just a very high-tech form. When the new data comes in, it comes into a fresh box after one of the boxes is filled. In Bitcoin's case, blockchain is used as a decentralized way so that no single person or group has control. Rather, all users collectively control. The data is irreversible. It's a permanent recording system. We can have the next slide. So here's the origin of blockchain. It was born October 31, 2008. That's not that long ago. And the inventor and author is Satoshi Nakamoto, but we don't know who that is. It's a pseudonym. There's a white paper, but nobody has ever said, yes, that's me. And it may be a collective of persons. And from the white paper, it says that the blockchain was using digital signatures, hashing, and proof of work to avoid double spending and fraud. The Bitcoin blockchain enables its participants to confidently transfer value using math for validation and verification instead of a trusted third party, i.e. the trusted third party are banks, right? That's been the trusted third party, but the blockchain is going to be the trusted third party. That's where the disintermediation comes in. Next, please. So here's the 5 characteristics of a blockchain. It's also known as distributed ledger technology, DLT. And sometimes when you're reading the financial news, it can become very difficult to understand sometimes even the word. I mean, you start reading about Ethereum, and we'll get to that. And you say, well, Ethereum's gas. Well, I mean, did Ethereum burp or what? No, but that's a fee because of the energy that it burns. There's a surcharge that they call a gas fee. So one of the things I hope the audience can get out of this is a little vocabulary. When you see distributed ledger technology, you're talking about a blockchain. So here's the 5 major characteristics. These are actually mostly part of the North Carolina definition that's in our Sandbox Act. It's a distributed database, peer-to-peer transmission, transparency with pseudonymity, irreversibility of records, and computational logic. And we'll get to a little bit more on this anonymity, because that's where, when Hunter and Randy talk, we get into the risk with regard to the criminality. And Don, as Don indicated, the regulatory sandbox has got to do criminal background checks, because with blockchain being anonymous, there's a lot of risk with regard to money laundering, which we're going to be talking about. And then the computational logic, we'll be talking about some of that, so that you can just get a picture of what we are talking about on the computational logic. Next slide. So here's blockchain types. And I'm going to be privileged to be speaking to the Banking Commission on this. And the interesting thing is, the blockchain definition for North Carolina doesn't say if it's going to be public or private blockchains. And there are certainly different risk factors to both the criminal enforcers in the country and to the public, depending on if it's public or private. So public doesn't have permission. It's free for anyone. It's decentralized. The currency is native, but it can be very secretive. So examples of the public blockchain would be Bitcoin, Ethereum, and Litecoin. The private has to have permission. And this is the kind of thing you can do on Meter As You Go on Amazon's ability to buy into blockchain space. But private is permissioned access, centralized, and typically no native currencies. For example, the Hyperledger, that is an example of private. So the private, we know who the people are that are on it. In the public one, nobody really knows unless you tell them who is on the blockchain. So if your mind can just go into where are the governmental enforcement for money laundering when you don't know who is transferring it, your mind can go crazy over that one. Next slide. So blockchain and cryptocurrency have enabled disintermediation and decentralization. Before blockchain, banking was the trusted intermediary. And basically, you'll find out further on, the enforcers of the banking laws, such as the State Banking Commission, that in North Carolina, we got to get on with it, guys, in becoming the trusted disintermediary, I suppose, and dealing with the blockchain and the virtual currencies. But blockchain becomes the intermediary and the trusted ledger, and the key word's trust. Next slide. We've defined basically blockchain by using the statute that Don Vaughn introduced to us. So the ledger has usually a Merkle Tree concept. This is not the only concept that can be used, but I'll go over that in just a second. And it also uses a hash, which is a 250 character string of data that's encrypted, and it cannot be reverse engineered, which we were talking about. Judy, next slide. Now here's a Merkle tree. This is essentially the logic of how the hamburger the steak gets ground by the meat grinder, becomes a hamburger and gets encrypted, and it goes in these little boxes until it receives all its hash, and then it becomes coded. This is an example of the computer logic on a Merkle tree. And if you want to start your own blockchain, what you can do is go get some physics grad students and some math grad students at a major university to work on this for you, because they're the ones who would lay the foundation of some of these. The lawyers generally would not have the math or the physics background to create this, but to understand it is another thing. So that's the logic, A, B, C, D, and it gradually goes up into the hash. You can see the direction of the arrows. Next slide. So then we have the SPY. This cryptography is, the old SPY decoding, where, basically you write the alphabet, ABC, but you assign it random numbers and you do SPY code. Well, the SPY code of the blockchain, the good ones, the one with Bitcoin is based on SHA-256, which is a secure hash algorithm. This is the one we can't reverse with current computing. We can't put the hamburger back into the steak. It encrypts the data, and once it's encrypted, it can be any length, but it's going to end up the same length. And I'm going to show you that on the next slide. Regardless of how much the data is, next slide, it will not matter. You can see here on the input for Fox, it ends up being, FOX ends up having a code that has all of these characters in it that are in the pink box. Well, also, you will see the red fox jumps over the blue dog, ends up with the same number of characters. And that's the way the hashing works. But I think from a lawyer's point of view, just remember, we've put the steak in the grinder and it's now hamburger, and we can't put it back together. So that's what you do with the blockchain. And by the way, the Bitcoin blockchain has never actually been hacked. We will be talking about a couple of other hacks in a minute. Next slide. Let's go on here. Next slide. So when I think about virtual currency or digital currency, I like to think of a framework, because I think a lot of the terms are used very loosely. And I think of it as two broad categories when you're thinking about virtual currency. And notice I'm using the word virtual currency, and I'll show you why in just a minute. You have two broad categories: central bank digital currencies, referred to as CBDCs, and then you have cryptocurrencies. So all virtual currency is not cryptocurrency by definition of most people. Now, these terms are bantered in social conversation and maybe even in the news media in different ways. But basically, if it is the legal tender of a central bank, a government, then it is a central bank digital currency. An example of that is China's digital yuan. And we'll be getting into that with Randy and Hunter. Those are backed by the central government. Cryptocurrencies are not legal tender of a government. I say Bitcoin, but I want to, maybe Hunter can address if Bitcoin now is the central bank digital currency, since El Salvador has adopted it as its official currency. It kind of puts it in a category that's outside of what we're really talking about here. So also, for example, Litecoin, Ether, those are not central bank digital currencies, they're cryptocurrencies. And a subcategory of a cryptocurrency are the stable coins. It's a variation on a cryptocurrency. Stable coins are not legal tender, but they are linked to a fiat currency, such as the US dollar. And as Randy is going to tell us, that a lot of times is used in hedging when you're trading Bitcoin and Ether very rapidly and you need to pull out of the market, you pull over into something called a stable coin. Next slide. So here is the North Carolina definition of virtual currency. This is the legal definition in the North Carolina General Statutes. And notice it totally deletes reference, or does not have a reference to a central bank digital currency. So legal government currencies are not virtual currencies under the Money Transmitters Act. A digital representation of value that can be digitally traded and functions as a medium of exchange, a unit of account, or a store of value, but does not have legal tender status recognized by the United States government. Next slide. Now let's look at the virtual currency definition of the IRS. And I want you to note that both statutes use the term virtual currency, not cryptocurrency. And that becomes very important to have a very clean understanding as lawyers. Virtual currency is a digital representation of value that functions as a medium of exchange, unit of account, and or store of value. You will notice that that covers both central bank digital currencies and cryptocurrencies. So you have the legal tender and the other things that are not government tender. So mark down those two differences. Next slide. So we got the surprise on the 2020 income tax return. You'll see at any time in 2020, this is where the red arrow is, at any time in 2020, did you receive, sell, send, exchange, or otherwise acquire any financial interest in a virtual currency? And notice again, they're using the term virtual currency. When you look at question 5 of the instructions, you don't have to say yes if the only transactions in 2020 were the purchases of virtual currency. So if you bought Bitcoin and it's sitting in your account at Coinbase, that is not triggering this, even though reading it, I would think it might seem like it does trigger it. It doesn't. But if you transfer that Bitcoin through Western Union or MoneyGram, I believe that it does trigger it under the 1040. Now, this is not a tax class. I've included a slide of the taxation toward the end of the materials, but that would be a separate class in and of itself. So if you've got questions, please put these in the Q&A because we would like to have some open questions. And in the chat box, remember to put your bar number or other things like your email. Now, a word about DAM. Wait a minute, next slide. There are more than 6,500 virtual currencies, believe it or not. And virtual currencies exist on the blockchain or distributed ledger. Next slide. So now we're going to talk about some illustrative virtual currencies, not legal or government tender. And the Bitcoin or Bitcoin Cash, a hard fork of the Bitcoin Cash was 2017. We're going to illustrate what hard fork is. Ethereum is traded as ETH, a blockchain with virtual tokens. Ethereum enables smart contracts. And Tether is a stable coin and a blockchain-enabled platform designed to use a fiat currency such as a dollar. And Randy and Hunter will get ready. We'll talk some about Tether in just 1 second. Not Tether, but stable coins generally. Next slide. So Bitcoin has a symbol of BTC, and it's got 8 digital places, 8 decimal points. There will only be 21 million, and there were slightly more than 18 million of those had been mined as of February 2021. Next slide. And there's been a lot of volatility, as you know, in trading Bitcoin. But if you remember, I said you go into the stable coins, which are the fiat currencies, to titrate your risk and hedge. Next slide. And then Bitcoin and Bitcash had a hard fork in August of 2017, and I'm going to illustrate a hard fork. This is kind of a terminology that you need to get used to listening to when you hear media or whatever. A hard fork is a drastic fundamental change to a blockchain resulting in two branches. And the reason for, I think, although I'll listen to what Randy or Hunter have to say, for the Bitcoin hard fork were all of the transactions that were so slow. Bitcoin could only process 7 transactions per second, whereas Visa could process 1,700 transactions per second, and Bitcoin had to have a faster processing speed. So let's see what they did. They took some weight off of the chain. So you see the basic chain is the green chain. The hard forks are the arrows off, and it's almost like a stock split. You get 2 for 1, except now they called it Bitcoin Cash. And they did this in order to speed up processing and to lighten up the original blockchain for Bitcoin. So here you will see that hard fork. And basically there's a fork that causes them to go to start a secondary chain on the blockchain that operates in and of itself. Next slide. And Ethereum's based are smart contracts. How many of you have, you can put in the chat box if you really understand smart contracts. Smart contracts are not the traditional thing that lawyers think they are. They're self-executing contracts with the terms of the agreement between the seller and the buyer written into the lines of the code. They're programmable blockchain logic. Now, this is where I think, Don, that we're going to get a lot of the innovation in our sandbox are going to be in the smart contracts. So let's look at some examples. Next slide. Next slide. So your typical example of a vending machine is a smart contract. You've got your dollar and you want your Diet Coke out of the vending machine at the courthouse. You put your dollar in. You don't have to have a teller. You don't have to have a cashier. The program of the machine knows that you're supposed to be delivered that Diet Coke. That is a typical example and the simplest example of a smart contract. So I believe what our Innovation Council is going to be doing is seeing these forward with smart contracts. Now, InsurTech, which is going to be part of the innovation, would cover insurance companies trying to make smart contracts to cut out intermediaries in the insurance process. And there's a product that you buy a death policy, a life insurance on somebody, and all you have to do is to feed the death certificate into the vending machine and you get the cash payment on their life when they die. So that's an InsurTech kind of product. And of course, we have a lot of supply chain smart containers that measure temperature would be another example. So when Pfizer's, or it was the Moderna, I think is the one that had to be kept cold on the vaccines. So did they stay cold enough throughout the whole time in transit? With a smart contract box, upon delivery, they could measure and know, was the contract fulfilled throughout. These are the kind of products that North Carolina Innovation Council is going to be looking for. Next slide. Now, Amazon has, this is something just absolutely fascinating. You know, Amazon does everything. They have a metered pay-as-you-go blockchain with Ethereum and Hyperledger Fabric. So you remember Ethereum is one of the ones that is anonymous, whereas the Hyperledger is permissioned. But you can rent space on a blockchain at Amazon and you got your blockchain. So there you go. That's innovation. Next slide. Now, there's the Ethereum and the DAO hack with cybersecurity. You know, I said that there've been no hacks on the Bitcoin blockchain, but there was one on the DAO centralized autonomous organization blockchain in 2016. The DAO raised 150 million in US dollars through the sale of Ether. And that runs on the Ethereum blockchain as a token sale. In June of 2016, a hacker found a bug or a glitch in the software and hacked out 50 million. Well, all of the originators that Ethereum had to do was to back up the blockchain, and the money was automatically restored. So with that, I'll take and ask Randy and Hunter to come on and tell us something about Colonial Pipeline, and Don Vaughn too, the Colonial Pipeline hack, talk about stable coins, and talk about also the DAO hack. Gentlemen, take it away.
Who's going first? You want me to go?
Sure.
Okay, I guess I'll start out with stablecoin, and then we can work our way to the others. I'm Randy Reynolds. Sit on the board with Carolyn and Hunter at Blue Ridge Bank. And a stablecoin, it's, you think of it like a money market, or it's a safe place to park, essentially is what it is. And it's a neat thing, and you can tie it, usually tied to the US dollar, another cryptocurrency, and now they're looking at all kinds of commodity-based derivatives, and even like a hybrid type of deal. And I've got a friend of ours with a family office in Dubai that's looking at issuing one that's stable coin that would be based on real estate. So that's kind of an interesting thing. The question is, or one of the questions that comes up, are stable coins really stable? And I would say it just depends on what it's backed by or what it's indexed to. And as it moves along with that, if the dollar moves and you have a stable coin based on the dollar, it's going to be as stable as the dollar. So that's just an easy way to think about it. It's kind of interesting. The other thing, it's a real competitor. It's a direct competitor to the US dollar. So that causes regulators and legislators and other people, kind of headache and consternation. In fact, as we speak, the House Finance Services Committee is meeting, and they're drilling people right now on that very subject. So it's definitely a potential threat to our dollar and to our banking system in general, because you can work outside the banking system. And the other thing is, when you're lucky to get a 1% on a CD today, it's usually a special offer if you get it. With stable coin and other coins, you can get 10 to 17%. I'm not sure exactly how they can afford to do that, but it's an interesting dichotomy, because that's very, very attractive, and it gets a lot of people interested, kind of like a high dividend stock, so to speak. And so there's also trade groups, like there's the Chamber of Digital Commerce. I think that's an interesting group to learn more. If you Google that and find out, there's a lady named Perry-Ann Boring that runs that. And then there's another lady, Natalie Drenell, that has lots of podcasts on Apple Podcasts on the subject, if you want to dive deep into it. So it's actually very interesting. Both of them know what they're talking about, and it's very educational. So Hunter, do you have anything to add to that?
Not to that. I'm going to hold my comments for sort of China, US, and El Salvador virtual currency adoption strategies, and very different. And it kind of ties into CBDCs and Bitcoin. But I think Carolyn was going to, or someone was going to talk about the DAO and the Colonial Pipeline hack first. Don, do you want to take the Colonial Pipeline?
Just quickly on Colonial Pipeline, we got interested because Colonial Pipeline runs through Greensboro up the East Coast. It was a ransomware attack, and damn if they didn't pay about $5 million. They tried to shut down the pipeline, the data computer system, and the FBI recovered 64 Bitcoins off of it from a virtual wallet, and then another virtual wallet, another virtual wallet. So I can't believe they paid it. They were working straight with the FBI, and they've identified 90 of these dark side ransomware attacks that have occurred, and they say more to come. We'll just have to see.
And Carolyn, do you want me to go into sort of the strategies now, or do you want to wait till later in the presentation?
On the international strategies?
Yes.
If there's strategy, we can wait, or either you can go ahead and go.
Go ahead, and when we get to the map that you told me to come in on, I'll come in.
All right. So thank you very much for your comments on that. The lack of hacking, though, is very interesting, that compared to other kinds of hacks. When you have blockchain, while there are hacks such as Colonial, but Colonial wasn't patching. They weren't putting on their patches. And if you are lawyers and you don't put your patches in as you're supposed to, you're going to get hacked. And you may get hacked anyway, but the blockchains are more secure. So let's go on to our next slide, Judy. So we have the stable coin. An example of a stable coin is Tether, and it's linked to the US dollar. Let's go to the next slide. And this is what the vulnerability is, that it uses its peg, which is something, loses its peg, which is something that Randy talked about a little bit, that we think that if it's a dollar, but then again, it might not be, and it could lose its peg depending on something that happened in the media or whatever. Next slide. Now here is a chart that I pulled off the internet of a stable coin and of Tether. This is actually the Tether chart. You'll see how it hovers right around $1. It does fluctuate. And as we've said, that's what, if you're trading Bitcoin or Ether and you need to get out of the market because it's wildly fluctuating someday, then you go over into your stable coin or your Tether account. Next slide. Then a word about Diem. That was Libra until December 2020. It was a permission blockchain-based payment proposed by Facebook. It would be backed by reserve assets, and it would be a single currency. And because of the way Diem was working with the Dollar Project on the central bank digital currencies, I personally kind of think that they were hoping that they would get to be the US digital currency, but it doesn't look like that is anywhere near likely to ever happen. Next slide. Then put in the chat box, have you heard of central bank digital currency? I mean, lawyers just practicing, I don't think that you encounter central bank digital currency, but the Federal Reserve of the United States has launched a study with the Boston Federal Reserve and MIT, where Hunter went to school, to come up with a plan to launch a central bank digital currency in the United States. And we have to, and we're going to go into some of the pros and cons of central bank digital currencies with the group. There are problems and solutions, and the question is, can we really keep up with the speed of processing in the United States if we don't adopt a central bank digital currency? And that's different than just the digital representation that goes into the banking system right now. It's a totally different system. Next slide. So basically, a central bank digital currency would be a digital dollar, like the digital yuan of China. And the Federal Reserve would set the rules. And boy, there's a lot of talk on the internet. The Federal Reserve Chairman Powell has a nice little video if you go to the Federal Reserve site. But we have one of our governors, Quarles, who said we don't really need one. We have another one that says, I don't know how we're going to survive in the international marketplace without it because of sanctions. Because here's the thing, if other countries, and Hunter and I will debate this a little bit, but if the US doesn't have a digital dollar that operates on a blockchain, we can issue goat cheese sanctions in China or Russia, and all they'll do is just bypass it through digital currency systems. And it essentially is weaponization of currency. And there's a lot that is written in the academic literature out of some of the major institutions in the United States on the risk of losing position as a global reserve currency. We are already slipping, the dollar is already slipping. And last I checked, it was 57%, which I think maybe some panelists will say, well, 57% is really high, but, and maybe we aren't really great stewards of that. But if we sink below and we are not the dominant currency in the world, does that have problems too? But what the whole thing is about is speed of cross-border payments. That's really the name of the game, is speed. Next slide. Now here's the map.
Yep. Do you want me to start in?
Start in. Hunter.
So I want to go through kind of the virtual currency adoption programs and strategies of China, US, and kind of this startup country named Salvador, which has gotten on the map lately. China initiated a central bank digital currency about 5 years ago, been in testing for 2 years. They have cracked down on all other virtual currencies. Bitcoin's been kicked out, Ether's been kicked out, and they now have 140 million digital wallets. So let that sink in. 140 million is half of the US, and they've done that in less than 2 years. They think they're going to have anywhere from 3 to 500 billion of transactions in 2022. And they're going to ramp up for the Olympics in 2022 with the digital currency. So why is it important? They're probably 10 years ahead of the US on developing a digital currency. The digital renminbi or the digital yuan is racing to become the transactional global currency. And that's really the politicization and the weaponizing of currency as well. You kind of see that they've had this long-term plan. How do you supplant the dollar as the global reserve currency? So the US is a little bit different. We're decentralized. We're racing to catch up, but our politics and a lot of the other issues are in the way. We don't have a clear policy. It appears that our policy may be focused on US dollar coins and stable coins. We may or may not have a central bank digital currency. It may be that we have a highly regulated CBDC pool or stablecoin pool that are issued by banks or issued by other financial institutions that are under a regulatory framework. Currently, we're the global reserve currency, and I feel like that's at risk right now unless we get our policy and our politicians kind of pulling in the same direction. So the big announcement was Salvador announced in 2021 with about 75% of their vote in their own Congress to adopt Bitcoin as legal tender. It was interesting because they did it at a 2021 conference along with Strike, which is a remittance company. And so you can kind of see the global border and payment systems are really what's driving what Salvador did. You think about Salvador, they got rid of their own currency in 2001. It's only US dollar based. They have no liquidity, very high inflation. It's not Venezuela, but it's probably pretty close. It's a very distraught, lots of problems on the economic front. And interestingly, they recognized in 2018, they recognized Beijing instead of Taipei as the Chinese government that they were going to do business with. So if you look at all the literature, why would you adopt Bitcoin instead of the US dollar? I think the biggest thing is they wanted to try to attract foreign investors without having it tied to the US dollar. That's kind of China in the middle. They've provided a lot of incentives for Bitcoin miners. They have geothermal and other energy sources, renewable energy sources. And so they're trying to make it so that there's foreign investment. And it reduces reliance on US trade and politics. It's going to be easier to settle in either a US dollar coin or digital yuan when it becomes than it will be to settle out of El Salvador into the dollar and then across to China if they're trading with China. So what are the pros of having Salvador, and why does it matter that Salvador actually has Bitcoin as their legal currency? 25% of the GDP of Salvador is remittances. That's a huge amount of money, and they're paying a huge amount of fees to places like Western Union, to SWIFT, the old SWIFT banking system. And the traditional banking system just has abandoned places like Salvador. They've abandoned places, except for oil reserves, places in Africa. It's gotten to the point where it has become an entitled banking system around the world. 70% of the population in El Salvador is outside of the traditional banking system. So crypto and Bitcoin in general, and in specific, has the ability to be much more inclusive with lower fees. I kind of liken it to the mobile phone world 20 years ago. Instead of investing in hard assets like landlines, it just skipped over and went into mobile systems in a lot of Africa, a lot of Central America, a lot of Latin America. And so 20 years ago, about 20% of Salvadorians had landlines. Now 120% have phone lines. And so there are actually more phone accounts than there are people in El Salvador. Bitcoin and cryptocurrencies, virtual currencies, really do tie into mobile payment systems as well. So it's a way to get everyone into the banking system. So what are the cons? Initially, it's going to be a super heavy lift to try to get into the banking system. Bitcoin's easy. The off-ramp into the dollar in Salvador is hard. You're going to have to build out ATMs. You're going to have to build out retail to be able to take a lot of these coins. There's also kind of forcing people who probably can't afford it into a very volatile currency. And going back to one of Randy's and Carolyn's points earlier, this is a massive KYC, BSA, and AML risk. If they're not into the traditional banking system, you have no idea where a lot of the funds are coming from. Are they coming from illicit activities? Are they coming from drug trafficking? And so one of the big things that Salvador is really focusing on is trying to make sure KYC is viable. So why is it important? So you have US on one side and China on the other side. If Bitcoin actually works in Salvador, think about all of the countries around the world that kind of fit into the Salvadorian model. They don't have their own currency, or they're tied to the dollar, tied to the yuan. They have underbanked, lots of mobile phones. If Salvador works, there's a real, if you talk to the Bitcoin maximalists, there's a real chance that 50 or 60% of the world then takes El Salvador's approach and either adopts some sort of virtual currency or Bitcoin. And so I think all eyes are there. They're developing it really quickly. There's a lot of problems, but it should be pretty interesting to see over the next couple of years.
Thank you very much, Hunter. So in bank talk, KYC is know your customer, and AML is anti-money laundering, and BSA is Bank Secrecy Act. And if you will think about what I said about blockchain at the very beginning, being permissioned or permissionless, anonymous. If it's permissionless, it's anonymous. So how do you know your customer? Hunter, or Randy? I mean, if we have a permissionless blockchain on Ethereum or Bitcoin, how is it possible to know your customer? Or does it matter? That's what China had trouble and went only with the digital yuan, is because of money laundering. They want
in the US, it is illegal to hold a Bitcoin wallet or a virtual currency wallet unless the KYC and AML process has been completed and verified by the company. And then the company is liable for any KYC, AML issues. And so I remember several years ago living overseas, I tried to open a Bitcoin wallet and it wouldn't allow me because I was a US citizen living overseas. I had to have KYC, AML done within the United States.
Thank you.
So that's the burden of proof is going to be on the companies. And as national banks, which is what we're involved with, as national banks become more and more involved in virtual currencies, the burden of proof is going to be pushed to the banks for KYC and AML issues.
Exactly. It's like the CPAs are responsible for the authenticity and correctness of the tax return. The banks are responsible for KYC and AML and BSA and currency transaction violations. So Randy Reynolds, my colleague, you had some thoughts on Venezuela, Honduras, and Cuba.
Yeah, it was, and it's interesting what you say about the AML and KYC. The challenge will be is when you have and it might be China, it could be another actor out there that decides they don't have that requirement. And then you can use funds from anywhere. And, we used to trade aluminum and actually manufacture aluminum in Venezuela. Things were great when we worked with Miami banks or when they worked with Miami banks, legitimate Miami banks. When the government changed, it switched over to a Cuban trading company with Chinese accounts. And everything was, everything changed, and there was anonymity. There was all kinds of things going on, and we exited the country. But it is sad because they used to make wheels there, aluminum wheels for cars, for Chrysler minivans. They made extrusions for building products in Florida, all kinds of slabs, aluminum ingots, you name it. And there's a country that was a member of OPEC. They were oil producing as well. They also had gold. There was a gold mine, an alluvial gold mine that we had in the river there. And when the gold came out, they went right into a bank in Miami. It's kind of interesting back in the good, when you could do that. But the challenge will be is, and it could be any government, is if they decide they're not going to abide by our rules, what do we do? Now we got a competing system, gray market, black market system. And that's a challenge.
So talk a little bit about the narco economy.
Yeah.
Hunter or
Yeah, I was fascinated by that because it's switched over, and that's where they're exactly the kind of group that would use it. North Korea is a big piece of what Kim Jong-il gets is narco money, which I didn't realize that. I know he used to supplement his income, but narco money is a big one. And same thing in Venezuela. It's become it's almost a drug dealing type mentality down there. You don't know who's going to survive, who's going to, I had some friends in Florida that they were supplying military boots of all things. And they went in, and I guess the guy asked for a bribe and he didn't do it, and then he got killed. So it's rough. It's worse than the Wild West. So it's a real challenge. Totally different than what it used to be. And it's scary because they're making a lot of money off the drugs, and they're controlling it, and they're laundering it, and they're doing everything that certainly we don't want to do and aren't allowed to do here, but they're doing it almost openly in our face, and there's really not a lot we can do about it, or nothing that we have done about it. Hunter might be able to talk about that better, but I was just amazed at how much of their profit comes from it. It's a lot.
So yeah, that's the issue with crypto, with Bitcoin and cryptocurrencies, is instantaneous and can be anonymous. And so what you'll hear a lot of the regulators say is when you're looking at the on-ramp and the off-ramp, that's when you have to build in the regulations. Is the on-ramp being, how do you get funds, your initial funds into the system, and then once it's gone through the Bitcoin exchanges, then how do you get it out of the system? I think we have rules and regulations to make sure Americans are in, or if you're going to transact anything in the United States, that you have to prove KYC, AML, but the rest of the world doesn't quite have that regulatory framework, and it does allow for anonymity and really frictionless trade, and so it's almost immediate. And I think it's going to get worse as a lot of these Bitcoin and what's called Lightning, which technology to allow higher volume of transactions at a lower price. Once it starts getting into the mobile phone networks and payment systems, I think it's going to be very difficult, because then it gets fractionalized down into smaller and smaller pieces, which is much harder to track.
So I just have one thing, and then we've got a question I want to go to. When China decided on to go forward with the digital yuan, they have given wallets to many of their citizens and loaded them with the equivalency of $6,000 and said, you can go out and spend this money around town to get the testing of that going. I have a question here, and this is going to be probably for Don, Randy, Hunter, and me, and I will start some of it, but let me tell you what the question is. It's in the question box. What has been the experience in the other states that have formed sandboxes in terms of what type of financial service has been produced and what services came forward requesting a regulatory workaround?
Well, let me just say that I'll give Hunter that question. And or Randy, here we just do financial services and insurance. Those are the first two we've got. A lot of states have begun financial services. I don't know the detail on all these other states. I've just followed North Carolina.
Let me give some thoughts about how this is materialized, I think, around the United States. And sometimes innovative product lines have been taken into existing financial institutions, such as a traditional bank. And those kinds of things have been housed within the banks, such as putting investors directly in contact with students, as SoFi started. That's the kind of issue that you have. So to get the regulatory approval on that kind of thing may not meet so many of the consumer protection laws and all of that. And what you found recently would be a lot of companies like Square buying state chartered banks to host some of the best of all worlds. Because one of the things about fintechs they traditionally have not been able to do is to take bank deposits. They can do lending, but they can't take deposits. So to get around that, you've seen them merging or acquiring a state chartered bank in several cases. For example, SoFi did that. So if you think about that regulatory framework, it's that's coming out of the sandbox. The other thing I will say that we have a lot of sandboxes because MasterCard has a whole host of sandboxes that they are launching on central bank digital currencies. For example, when the Bahamas started the sand dollar, MasterCard went down there with their sandbox and helped them do all the testing for it. You have seen a few banks take in sandbox projects on non-traditional banking projects. So the Innovation Council for North Carolina is going to be limited to insurance products and to banking products to start with, at least.
Carolyn, I just had two articles, one on the US and success with sandboxes, and one in the country of Lithuania, which is probably the shining light for fintech development in Europe. Extremely innovative, and they started a regulatory sandbox probably 5 years ago. That's been very successful.
So you can see those in the chat box if you look.
And if I could kind of talk about China on one word, part of the issue with China is their citizens recognize that they're being spied upon anyway. And the government knows pretty much everything about everything. And so when they start launching fintech platforms like Ant or with the digital renminbi, privacy is really not at the center of any, anonymity is not existent, can't be existent. The government's going to control the currency anyway. And so when they launch a lot of these products, there's very fast and rapid adoption because the Chinese citizen says, well, if it's going to be really convenient, my government's spying and taking all my data anyway, why not just be very convenient? Ant, for example, has their your W-2, your mortgage, your bank account, your finance account, your insurance account, all in one platform. And we're in the US, we shop a little bit more. We don't want to have one provider know everything about us. Their privacy is really not even discussed. And so adoption rates, I think, in China are going to be much higher than they would be once they launch into the broader world. I think adoption rates of a digital renminbi is probably going to be limited to trade finance initially, and then from there, maybe into more retail finance. Whereas the US, I think you're going to get multiple products and a lot of innovation.
Hunter, in China, can they turn, I understand, depending upon your social score as opposed to your FICO score, they could
Yeah.
turn your digital wallet off or limit it.
They can limit it. Yeah.
Yeah.
And I think there's a really scary Netflix show about that. I think it's Dark Mirror. It's pretty terrifying, but it's the world that they live in versus the world of liberty and being able to choose your provider that we have. So it's going to be an interesting battle.
When Lending Club, I'm sure everybody's heard of Lending Club. There's the Diane Wrong Lending Club of China. Went great guns after 2014, and multiple offices all over lending money with investors providing the money to be loaned at very high interest rates. And China really cracked down on that with a bunch of regulations in 2018 because there were so many Ponzi schemes and money laundering that became involved in it. So they have a very strong regulatory structure.
Well, even more chilling is Jack Ma is the founder of Ant, and they went public, had a $25-30 billion market cap. He was somewhat critical, not super critical, but somewhat critical of the government, and he disappeared for about 3 weeks. And then kind of came out on the other side, didn't really discuss where he went, but there's speculation that he was detained for a couple of weeks because of some of his comments.
So, I guess the bottom line on the question, the sandbox concept, while not new, is fairly new in the United States, and even the other states that have started this, it's fairly new. But I think a lot of it is to get around consumer fraud protections so that they won't be subject while they're testing these products and going around, not around usury laws, but bumping up against them, and what are the disclosures going to be and that kind of thing. So I think that the articles that the articles that Hunter has put in there will be helpful to answer that question. And if any of the audience members want to put an answer in the chat box, we'd welcome that too. So I guess with that, we'll go on back to the slideshow. For those family lawyers, we've got some stuff about being paid in Bitcoin coming up. So you can see here how far behind the US. Hunter says that we're racing toward it. I don't know. It looks like to me that we're actually losing the race on this in the United States. Next slide. We've covered Diane Wrong Lending Club. I would note that China didn't even have a credit reporting agency when they started all of this. Next slide. So the challenges with CBDC are data privacy, anti-money laundering, KYC, and cybersecurity, and making those things secure.
Okay, so let me know if there's any issues hearing. My name is Michael. I'm an attorney that works at Woodruff Family Law Group on the family law side. And at my time at UNC, I was on the North Carolina Journal. I was an editor at the North Carolina Journal of Law and Technology. So you could say that the intersection between law and technology is definitely something that I want to keep tabs on. And anyone working in family law that hears about cryptocurrency, virtual coins, virtual currency, probably immediately jumps into how these assets are going to be divided in a divorce and separation. Next slide, please. So I'll go really quickly. We've learned a lot today. And so the first question you should ask a client, or a client would ask themselves, is when to suspect that there are hidden assets like cryptocurrency, these virtual coins, in a case. And probably the first thing to note is, and then the spouse would know best, is whether or not the other spouse is financially savvy. Some of the people on this panel obviously are, and so they would be good candidates for holding cryptocurrencies. So knowing your spouse is number one. And none of these factors are in themselves dispositive. You have to know who you're dealing with. The second thing is technology. Because these coins are digital, because a lot of the trading and the platforms are also digital, they're going to be glued to their device, whatever that is, a phone, most parts of a phone, tablets, computers. They're going to have the exchange and wallet apps such as Coinbase. And so those are things to look out for as well. If you see them using them, if you see those apps on their desktop or on their phone screen, it could be an indicator that perhaps they're looking into it or they've already got some that you may not know about. And the next one's a little bit more rare, but occasionally you can make purchases with these digital currencies. For a time, I believe Tesla was accepting Bitcoin as a method of payment for their cars. And so one way to maybe, one indicator of when somebody has a hidden asset in virtual currency is if there are purchases that don't seem to be coming out of bank accounts, especially those that are in the technology sector, such as Tesla. So if you see anything like that coming up, then that could be an indicator as well. The final thing is just overhearing talk. It's a hot topic. They're going to want to talk to their friends about it. They might talk to you about it. And you use key terms that you've heard here today, hard forks, gas, that kind of stuff. When you hear that kind of stuff, and then it's another indicator. Next slide, please. All right, and another way people can come into Bitcoin or any other virtual currencies is mining. And so mining requires electricity. It also generates heat, which is why you get this picture of snow melting in this particular apartment. And so a way to check to see if there could be mining going around is either looking at the hardware that's associated with mining, such as computer parts, mining rigs, as they're sometimes called, computing units, graphics computing units, and your electricity bill. If it's skyrocketed for no apparent reason, then somebody might be partaking in mining. Next slide, please. And so the next part for attorneys is how do we find these crypto assets? The easiest way and the most straightforward way really is to follow a paper trail. Bank statements, tax returns, as you've seen, people need to, or should be indicating when sometimes they have an interest in cryptocurrencies, virtual currencies. You have the currency exchange and wallet apps that are on the phones themselves. Next slide, please. And so here's an example of what an actual statement looks like when somebody's transferred money into their Coinbase account. It's very straightforward. It says exactly what it is. A whole number of amounts you'll note, typically 500, 1500, whatever it is, into Coinbase and Binance, whatever, Robinhood, whatever app that they're using to function as their wallet or exchange. You can see these typically whole number of amounts going in there on these on your bank statements. Next slide, please. And the other way to do it is through discovery. Attorneys are pretty well versed in discovery, but the questions you want to ask are to list the cryptocurrencies, the virtual currencies that the spouse has, when they acquired them, the value, if they know it on data acquisition, where it's held, what exchange, what wallet they're using, what app they're using, whatever language you want to use in there. But those are some of the big categories you want to know because those are the important ones when it comes to the distribution of these assets. Again, in your request for production of documents, you want screenshots, statements if they can get it, documentation of transactions. Oftentimes when you purchase a virtual currency, you get some sort of verification email, some sort of confirmation or receipt of the transaction. And because of the digital and virtual nature of these transactions, they're almost always going to be in some sort of digital form. Coinbase, you can download your transaction reports. It's very, very detailed down to the exact second the transaction went through. And there's also on a variety of these apps, we'll have charts and tables to show how much a particular coin or asset was worth on a certain day or time. Outside of the general discovery that you can issue, you can subpoena Coinbase and other US-based exchanges fairly simply. For example, that's one for Coinbase. If you click on the maybe found here button down there, you don't have to in this slide, but you can find who to serve the subpoena on. And North Carolina happens to be currently CT company, which a lot of us will know is somewhere over in Raleigh. For those who are a little bit more advanced or people who are really trying hard to hide their assets, you would have to go into some sort of accounting or technological forensics, someone who can download the data off of a phone or look at these statements and trace money. There are people out there who can use third parties and cash transactions to acquire cryptocurrencies by paying someone else or buying Amazon gift cards for somebody, and in turn they purchase the digital coin and put it into a wallet. But there's typically always some sort of paper trail that you can follow that ends up back to finding where the asset is. Okay, next slide, please. And so a couple of cases have made their way into courts of appeals, and there are opinions on them. This is one I found that's probably pretty interesting. It comes out of California, which for us North Carolina attorneys will note that they're a community property jurisdiction. So the rules are probably a little bit different. But essentially what happened here is that the husband bought Bitcoin after separation with marital funds. And in California, apparently, temporary restraining orders are given out to not waste the marital property. And so this husband violated that when he bought a bunch of this Bitcoin. And I believe this was early on in Bitcoin. He paid what I think was probably overall between 1 and 300,000 for about 600 to 1,000 Bitcoin at the end of the day. So obviously by the time this case came down, his assets had grown by millions. And so what happened is, in the trial court at least, there was a judgment for the in-kind distribution of this Bitcoin. What the wife decided just to take half the coins instead of some other sort of offset of value or more interest in a certain other asset. And when she found out, what happened was the husband couldn't access some of his Bitcoin. He had 1,000, but he only had access to about 600 of it because 400 was lost to an exchange called Mt. Gox. They had some legal troubles. They had some bankruptcy issues. And so basically 400 of his Bitcoin was inaccessible. She filed an emergency action. The case was eventually decided under a breach of fiduciary duty. And the relief that the trial court had crafted was that the husband was ordered to transfer more of the coins that he had received to the wife and pay fees. And that was affirmed by this California Court of Appeal. And so it serves as a reminder for all of us to think how these assets are to be distributed in kind, award. There are no North Carolina cases right now, but it's an interesting thing to think about. Next slide, please. And so now going to some more practical matters from the North Carolina State Bar. This is a 2019 ethics opinion about the acceptance of flat fees or acceptance of virtual currencies for flat fee legal services. It is allowed, but however, there are a couple of rules you have to adhere by if you're going to do this. The basic one, the most essential one, is that it's seen to the State Bar as a business transaction with the client. So that means that you have to comply with the rules with Rule 1.8, which will be on the next slide, please. And so as applied to virtual currencies, this is essentially what needs to be discussed with the client and agreed upon. The client and the attorney has to reach a mutual agreed upon determination of the value of the virtual currency exchanged at the time of the transaction. And it must be included, that value must be included as part of the agreement, the retainer agreement, whatever you have between you and the client. You have to advise the client that they can seek independent legal counsel on this particular flat fee transaction and give the client some opportunity to retain counsel and, I guess, talk about what's going on when you pay with virtual currency. And then you get the informed consent on the essential terms of the transaction, as well as the attorney's role in the transaction. In this case, when you're receiving virtual currency, the attorney's role pretty much is only receiving their currency. They cannot represent this client in the actual transaction. And it's a little confusing, but I think what it means is that you can't also give them advice in bullet point 2 about what the ramifications are about using virtual currency, because we've heard that it's incredibly volatile. Things change all the time with the value of it. And so there's risk and reward on both ends, attorney and client. But the attorney who's accepting the payment is not the person to give counsel on that kind of advice. Next slide, please. And so these are a couple other ancillary things in that opinion about what attorneys cannot do. And one of them is to use them as retainer funds to be billed against for work. Additionally, a lawyer cannot receive any virtual currency to hold in trust for any reason, maintain it, or disperse it, or basically when we hold it in trust for the benefit of someone else. Next slide, please. And so really quickly in summary, you seek information to know about the spouse, your client's spouse, or your own spouse, about whether or not they could be hiding virtual currencies. Asking the right questions in discovery and getting the right documents will uncover any hidden assets. And then the next step is to think about what you want when it comes to distribute, when it comes time to distribute those assets. And finally, the ethics part of it, if you are considering accepting virtual currencies as flat fees for your services, look into how to word the language on your contracts, on your retainer agreements, and weigh the balance between risk and reward when you accept virtual currencies. And that's it. We can run back to questions.
So thank you so much, Michael Yin with Woodruff Family Law Group. Our time is up, but I want to invite, if you would like to stay, we've had a few more questions. Certainly we understand if attendees need to get back to work, but because we have now fulfilled, I think, the state bar requirement for getting the 1 hour of technology credit. So, but we will have a few more questions, and so we invite you to stay on. I did think of a couple of areas that I think may be ripe for the innovation. So the Innovation Council, non-fungible tokens. I think that that's going to be an area where they're going to build out something for the transfer of non-fungible tokens, which these are still the rights of those kinds of things, but you've heard of, the best squat that went for $90 million, all of these huge fees for these digital images. So that may be an area, I think, of innovation. And then I think of a company called Afloat that might have been in a sandbox, but for another setting, which this lady built a blockchain just for the purpose of transferring and trading tax credits among the states where you can trade tax credits. That's not allowed in North Carolina, but some states you can actually trade tax credits. So those would be some things I think that you could get into an innovation on. So would all of our panelists like to say one final word? I will turn it to Randy first, and then to Hunter, then to Michael and Don, finally.
The only thing I'd say is it's a brave new world. There's lots of great opportunity. I think the way our central banks are printing money, that's definitely something that we got to look at. The crypto is going to take over, and it's going to be very interesting.
Hunter, if you want final words, use something on the.
Sure. I was looking at Steve Coggin's question.
Okay, good. Answer.
One of the threats that USA has always used as leverage in major disputes is dollars internationally, and I think, it's kind of a double-edged sword. I do think that other countries are trying to break that hold over their sovereignty from the US by adopting or looking at other currencies. I also think that's the fear in the United States, or at least from the regulators, is that we're very far behind, and that weapon we had, or that lever we had against other countries, has the potential to go away unless we act quickly. The problem we have right now is we're having an issue running quickly because of politics. And so I'm not sure where we end up. Hopefully we kind of recognize the threat and recognize the opportunity and do the right thing by coming up with a central bank digital currency and maintain our position. But I'm hopefully cautiously optimistic, but we have a long way to go.
And China's already there.
Yeah.
Michael?
Yeah, no, it was especially enlightening to hear a lot about this international stuff. And, it is a fast emerging field. And I think as attorneys, we have to be aware of this and think critically on, what's going to go on ahead. Technology sort of always outpaces the legal side of things. And, the faster we can get this information, the faster we can present it to lawmakers efficiently and effectively, will hopefully go a long way into advancement and innovation as well. It's certainly an interesting time, and there's a lot more to be learned about this, and there's a lot more to really think about going forward.
I want to thank all of our attendees. And before we go to Don, I want to thank Judy Wasabi, who is the communications director at Woodruff Family Law Group, who has put together today's technical side. So thank you so much, Judy. And John Davis, who is our production manager for videos, will be editing and putting sandwiches on this and all of that so we can post the video. Now, with the final word, none other than the Honorable Don Vaughn.
Well, the final word is, and I'm going to quote one of the commentators, it's like the wild, wild west. And that says enough. Merry Christmas, happy holidays to everyone. Carolyn, thank you for doing this. Judy, thank you for doing the slides so well. I think we're planning on doing another seminar in January where I update the legislature. I will certainly include this. By that time, the appointments should be made. They should have had a meeting with this group, and we'll continue on with the Wild Wild West and look forward to seeing everybody soon. Thank you.
Bye.
All right.